Hi everybody, this is Gary Dean with Sentiment Timing, and this is our free weekly video report for Monday, April 11th, 2016. I'm actually going to do a few of them this week. I know last week I was supposed to get one out on Wednesday or Thursday, and we're working on a really big marketing program, so I ran out of time. But this week what I'm going to do is I'm going to try to give you a series of either videos or just alerts and stuff like that throughout the week, and go from there. So right now, we have the markets that have been kind of crazy, and a lot of the movement that's been happening has been taking place in overnight trading, and we've seen a lot of these gaps ups, and a lot of the gaps have been fading. It's really just seeking a direction right now, and I'll go through all of our regular charts and just what we see playing out. So to start off, at Sentiment Timing, we believe that human beings in the markets are irrational, and there's always going to be an irrational element at work, and that's what creates market opportunities. Now, we find these opportunities through Woody Dorsey's proprietary sentiment database, as well as his technical timing indicators, which indicate when to expect these turns, and then we match them up with just regular technical analysis and pattern. We try to seek different patterns that are in play. So we're not gonna be 100% correct. I don't do these videos. We don't claim to be 100% correct, but we're probably correct close to in between 80 and 90% as far as when the turns take place. It's just a matter of really the degree of the turns, and some of them are head fakes, and we've seen a few of them start really in February, and it continues. But what we try to do is just let you know, even though a technical timing indicator may not have worked and we may have seen stretched sentiment, is it safe to be buying? And we kind of view that through a technical basis as well. The way that we do our market timing matrix is a time aspect, and that's the technical timing indicators, and that is when to expect the market to reverse. And we give these dates. Usually they're a couple weeks in advance. We try to match that up with sentiment, because typically these big market reversals are going to take place at either bullish or bearish sentiment extremes. If we're looking for some type of low to hit, most likely what typically happens is we get a series of extreme bearish sentiment readings, and when we're looking for some type of top, we get a series of extreme bullish sentiment readings. And then again, we look at the regular technical analysis. Are we getting bearish or bullish divergences on the regular technical indicators where support and resistance? And that's how we kind of relay the overall message to everybody. And really the way that it works is you look for, when you're at this euphoria area, you want to start looking for an area to fade the rally and either move to cash or have tight stops in place if you're long, or build a short position if you're aggressive. And the same thing when you get the capitulation on the downside, you want to start either covering your short positions, or you want to either tighten your stops on your shorts, or if you're aggressive, start looking for some type of low. So that's really the overall basis of everything. Now, we just sent out this alert today, and I had to block out the date for when we're looking for the larger reversal to take place. But we can see we came in at a 66 bullish reading, so that's kind of in the middle. But we've had a number of bullish extremes, and price has been struggling to break through those right now. And really the big thing is that we just need price to really react to a lot of these negative indicators and different types of things that we're seeing, that that is telling us to be a little bit careful on the long side. And I'll go over all those. But right now, what we're looking at is that, that these markets are not as safe as everybody believes they are. But until the price breaks, it could be persistent into a particular date that we're going to be watching. So taking a look at our sentiment data here, you can see that this is one of the things that you can see all these bearish sentiment readings, and that was at the low. And from there, we've had 1, 2, 3, 4, 5 extreme bullish readings. And the important part about that is we still have another 70 odd points to go until we get to all-time highs. So it's, you know, the fact that everybody is getting already bullish on this when we're not making new highs, again, throws up a red flag, and that's really one of the things you want to pay attention to. Now, looking at the intermediate term sentiment, you can see that, you know, when we start reaching these levels, you want to be on alert. You don't want to be complacent on the bullish side, because when the market turns, it goes in extreme, it goes very fast, and that's where volatility picks up. So right now we have sentiment that's at extremes. We already know when to expect the larger turn, but what we have explained in some of other reports, the larger turn may come off of a secondary test of the high. So it doesn't mean that we have to go up into that turn. We may head down and then have a 2, 3, 4 day rally that runs into the date that tests the highs or even makes a secondary high before things roll over. And that's where knowing what that date is important, especially since we already know that we have sentiment that is at extremes. So these are some of the things that I go over in my Market Pass videos that I can, you know, you guys can get. It's a free subscription if you subscribe to Sentiment Timing. But these are some of the breadth indicators that I go over. And what's important about them is this, is that we have, this is the advanced decline line here. And the reason why I'm showing it, these are some of the highest levels that we've ever seen. Now, when we've been up at these levels here, you saw that we saw choppy markets, and really there was no huge breakout in the S&P. Once we had the big sharp decline and we started getting back up to these levels, this is what caused big drops. So we are, the breadth-wise, we are just extremely, extremely overbought. And one of the reasons why I believe that the bulls are having a really, really hard time just busting higher is because there's just not a lot. There's not a lot of fuel in the tank as far as to be able to find new buyers and push stocks higher. So now, if we take a look at our, this is just a bullish percent chart here. And again, we're at levels that we've never seen before. So there's not a lot of gas left in the tank. And again, why we've been struggling at these levels, and a lot of the shorts are out of this market right now. So it's, you know, you're going to have to find new buyers. And when you have our indicators, or let's say the internals, that are just this extended, it's very difficult to push things higher, and we've seen that. So that is, you know, some of the internals as well as sentiment that's throwing up red flags. Now, if we take a look at just the regular charts, this is the daily chart. Again, we have huge bearish divergences on the daily chart. Now, we had bullish divergences when everybody was bearish on the markets, and we saw what happened there. And the same thing happened here. Now, we're right in the thick of resistance right here, so you got to be careful. And I think even if we do see price break through these levels, it still has these resistance levels. So the fact that we have our bearish divergences on the daily charts, as well as sentiment that's at extremes, and we have our internals that are at extremes, you have to be really, really careful with this market. And I think when the upcoming next turn comes on the date that we're anticipating, it's really going to be a very good short tide trade. But until we see price react to all of these internals, the bulls are in control, but things are getting on, they're running on really, really thin ice. So that's pretty much all I have. Tomorrow I will try. Another thing I want to show you is that we've had this is something else that I show with the Markets Path, that the videos that I do, is this is money flow and block trades. And for the last 5 days that we've seen gap ups, the spiders has been the number one spot as far as total money flow, meaning even though the S&P has been heading higher, money's been flowing out of it, and same with the block trades. Now, I watch this because this is really where the big money is. It's, you know, when you have block trades and they're going on the sell side instead of the buy side, you want to be really, really careful with, you know, with being long, because underneath the dark pools, they're selling this rally. So with that, that's pretty much all I have for tonight, or today, let's say. And again, some of the breadth charts that I show you, this is what I do in my nightly videos for Markets Path, and we're giving a free membership to that for anybody that becomes a member of Sentiment Timing. I believe there is going to be some kind of special. I'm not sure what they're going to be sending out, but just look for the coupon on there. And until either tomorrow or Wednesday, be a little careful with this market and have a great night.